This is a Power 98.7 podcast. Now we're talking. Subscribe to Power 98.7 podcasts in iTunes or wherever you get your podcasts. There's more on power987.co.za. Tweet Noluthando at Nolu_MM and hashtag Power Business.
All right, it's 18:36 on Power Business. We continue our coverage of results. And on the line, I'm joined by Chris Meyer. He is the Group CEO at Lesaka Technologies. As we reflect on the company's latest set of numbers, it's a fintech business that really looks at helping informal businesses really make some of their operations and abilities formal, but also looking at consumer markets. We have insurance there. We have some loans there, really a consumer-facing business. Chris joins us now on the line to help us unpack how the company has fared over the last financial period. Chris, good evening to you, and thank you so much for your time.
Good evening, Noluthando, and thank you very much for having me on the show. It's nice to speak to you again.
Wonderful, Chris. Let's get right into it. It's been a really decent period for Lesaka. Let's talk about that, just considering all the strain that consumers and businesses have made reference to over and over again.
Yes, it has. It's really been an outstanding year for Lesaka, transformational in many ways. And we're proud of a strong set of results that we released today, which come off the back of the successful integration of the Connect Group, which was an acquisition we made last year and is now the cornerstone of our merchant business, together with the turnaround in our consumer business, which we spoke about previously, was in a tremendous loss-making position and now has turned the corner and is actually contributing positively to EBITDA for the group. So it's a real milestone for us, as a fintech with a market cap of 4.5 billion rand and revenues of in excess of 9.4 billion for the year, and that's up from 3.3 billion last year. We really feel that we are a leading fintech in South Africa, and I can't think of too many other businesses of our size and scale positioned to serve the informal economy, small merchants and consumers in the lowest income groups in our country, in this exciting journey around supporting the transition from cash to digital.
Chris, are we, accurately capturing that informal market as a South African? Sometimes, we look at data coming out. You would have, first-hand view of what's really happening there. Talk to us about some of the insights that you're seeing there that are also helping you improve on what you're offering this market.
It's absolutely. So we see ourselves as one of the leading dominant, players in the market serving the informal economy. We processed 26 billion rands worth of value-added services through our point-of-sale terminals at merchants in spaza shops around the country over the last year. We saw 12 billion rand of throughput through our card devices, and of that, 8 billion was in spaza shops in the informal economy in South Africa. 8 billion is over 300% increase over the year. So we've seen a tremendous, increase in adoption of card payments. And, we know that less than 4% of merchants in the informal economy, have access to card acceptance technology. So, our number is growing fast, but it's still, such early days. We're still at such an early point of adoption. 90% of transactions in the informal economy are still in cash. So we focus on serving the needs of the merchant around both cash and the adoption of digital, serving both, recognizing this trend that is going on. And I think what we also tremendously encouraged by is it's been a tough environment. It's been a tough environment for all of us. Load shedding has compounded by the cost of living struggles that everybody has faced. Our customers have faced, our merchant customers have faced. But through that, we've still seen great growth in our business. We've seen a resilience in our customer base. We believe that, despite the tough environment, there's as I say, a resilience amongst our customer base that, underpins the theme that we are supporting in the market.
Let's talk now about the consumer division there, Chris, because of course that is consumer facing. Talk to us about the demand for credit for insurance products and also how that division would have been impacted by the high interest rate environment that we see.
So, firstly, our consumer division has seen a tremendous turnaround in terms of profitability over the course of the year. Last year, the business reported a 329 million rand loss. And this year, very proud to deliver a 59 million rand EBITDA profit. So, a big turnaround, 388 million turnaround in that consumer business. Within that, we have extended over 850,000 consumer loans, small loans to our consumers. That equates to over 1.3 billion rand over the course of the year. We've written over 125,000 insurance policies for our customer base. So, we see ourselves as a significant player in the market, servicing the needs of this lowest income group in our country. And what's interesting for us is we have not seen a material spike in credit loss, unlike what we have been seeing in other parts of the market. So our loss rates have remained around 6%. And I think that's testament to our customer base, who we offer lending into our customer base as part of a holistic product offering. We only lend to customers who have a bank account with us, that we have great data on, that we understand. We understand the reasons for demanding credit or requiring credit, and it's often around things like, we see spikes at the start of the year, for example, around things like school fees and school uniforms and things that are really important and crucial to improving the lives of our customer base. And I think that is why we see such a value placed on the credit and relatively low loss rates on the whole in our space.
Very interesting to see data play such an important role in how you've managed impairments over this period, Chris. Let's touch now on your balance sheet and the strength of that. Of course, you've spoken about bringing Connect Group online, and that was an acquisition. I'm wondering if any of those are on the cards.
So the Connect Group has been a transformational acquisition for us. We reported in our merchant business over 600 million of EBITDA coming from the Connect Group. So it truly has been transformational in that regard. And as I say, it placed us as one of the leading players in the informal economy serving small merchants. We also sort of looking ahead to the year ahead for us. Off the back of great growth and great, turnaround in profitability, we spoke today about, EBITDA growth of between 37 and 49% over the next 12 months. That is driven by both the growth we expect in that consumer business as well as what the Connect Group brings to our group. So, yes, it's been a great acquisition for us. It's exceeded its base case. In terms of our expectations of at the time that we made the transaction, and has positioned us as the fintech platform in South Africa focused on financial inclusion for small merchants and consumers in the lowest income groups in our country.
I must ask you, Chris, just the insights into South Africa's fintech sector there. Sometimes because of our very well-developed financial markets, our banks do a really good job. It can seem like it's a very difficult place to come in, to spot a need and possibly meet it with the accurate speed and, of course, then balance sheet to do so. How are you faring? And I'm wondering if, this acquisition of the Connect Group is that game changer that you needed to be able to meaningfully play in this space because it is so difficult.
So what is interesting is, we're a NASDAQ listed entity. I mentioned a market cap of over 4.5 billion, and we've got a very supportive and strong shareholder base with VCP Value Capital Partners as our largest individual shareholder at over 25%. So we have a very supportive shareholder base who are backing us strongly. And a big part of our strategy actually centers around M&A. So to your question, the Connect Group was a transformational acquisition, but we continue to look for opportunities that will, further add scale to our platform in terms of customer base, or will broaden our offering to our customers. And we see this M&A aspect of our business primarily within our merchant business. And we talk about disciplined approach to M&A with a high bar in terms of, the hurdles that we will set in order to do a deal. And we continuously are looking at opportunities across the market share in South Africa. There's some exciting, opportunities that we look at and we evaluate. As I say, we feel that will be part of the overall strategy of creating the leading platform focused on financial inclusion in our country.
Well, Chris, it's been a pleasure catching up with you, and congratulations on a stellar performance.
Fantastic, Noluthando. I really appreciate it. Thank you for having me on your show.
Thanks for chatting to us. Keep well. That's Chris Meyer. He is Lesaka Technologies' Group CEO, speaking to us about the transformation that they've seen in the company as a result of an acquisition. Sometimes the best way to grow is through buying a whole new asset. It's 18:46. Let's take a peek at the roads.
You've been listening to a Power 98.7 podcast. For more podcasts, visit power987.co.za or subscribe wherever you get your podcasts.